All right. I didn't take any trades today because FOMC meeting minutes happened today at 1300 and I don't trade FOMC. I've always had some bad luck. Normally if I try to trade the morning session, it's extremely choppy and not very good, and then when I try to trade the afternoon session in FOMC, it just gets wild. So, but I hopped on, noticed a really good move in the markets that I wanted to remember and I wanted to note, so I'm going to go over that. No high time frame, only low time frame. I'm starting to think that I might be a better trader if I only traded low time frame and didn't get a high time frame bias, because I took a loss on Tuesday only based off of my high time frame bias. And it was like that was ridiculous. But if I would have just read the low time frame confluences, I would have been better off. So, anyways, let's get into it. Start on the 15-minute. We have this 15-minute fair value gap made during pre-market this morning, or an hour before pre-market. Doesn't really matter when it is made. We have a 15-minute fair value gap right here that it comes and touches a consequent encouragement of beautifully, right? No one can deny price action that smooth. Drop to the 5-minute. So right off of this 15-minute fair value gap, we get a 5-minute fair value gap inversion. Fair value gap. It's a 15-minute fair value gap. Closes above this 5-minute fair value gap. Trades back into it. Bodies stay within side. And it is a 5-minute BPR. I know there's a 5-minute fair value gap on this side, and the bodies respect consequent encouragement of that. Look at that. Absolutely gorgeous. I'll just make this a random ass color. Bam. And as usual, I like to write down confluences. So you got a 15-minute fair value gap along with that got respected. 5-minute inversion fair value gap. I'm gonna say or BPR. I don't really like BPRs too much, especially obvious BPRs. I mean, I don't think this was an obvious BPR, but a lot of times the market will make the most obvious BPR and then basically say, fuck you, dude. Yeah, excuse my language, but it makes you think when there's a fair value gap and then an overlapping fair value gap, it's like probably going to hit it and go that direction. But I know that this market loves to be like fair value gap, and then just push through. And I may even reverse it one more time to go lower. So this is a bullish BPR, but all it would have taken for is this 5-minute candle to close right here. And then this 5-minute candle to trade up, and then it could have been used as a bearish BPR. So BPRs are real choppy. Inverse fair value gaps, I think, are a lot better. And the fact that the candle bodies stayed within both is ideal either way. So 15-minute fair value gap, 5-minute inverse fair value gap, or BPR. We also see a 5-minute OTE retrace. If I go from the low to the high, candle bodies respect 62%. The wicks, like ICT says, the wicks can draw outside the lines. But look even on the 1-minute candle bodies. 1-minute candle bodies do not close below 79% retracement. So you have a 5-minute OTE retrace. And then what I like is you wouldn't know that the 5-minute respected this fair value gap or BPR until this 5-minute candle closure, right? So you'd have to wait for this 5-minute candle 11:55 to close. So at 11:55, that candle closes outside of that fair value gap, keeping it a bullish fair value gap. So it's a well, actually, not keeping it, I should say, because it is a BISI or an bearish fair value gap. So it it when it gets closed above, it becomes a I should have said I think CB. I'm not really good at ICTs, BISI, and CB. So, anyways, it's a bearish fair value gap, closed above, turns into a bullish fair value gap, gets traded into, bodies respect it. Right here, 5-minute candle closes outside the fair value gap, keeping it a bullish fair value gap. 12 o'clock opens, creates a 1-minute fair value gap, which traces above this high. I know it doesn't close above it, but traces above that high. And ICT says as long as you have a good bias and confluences, it just needs to wick above it, not close above it. So yeah, 1-minute close above there with a 1-minute fair value gap. Whoops. Bam. This would be the ideal entry. Right here, when it creates this 1-minute fair value gap, enter right here, stops below this, the consequent encouragement of this 5-minute fair value gap or this 1-minute low per ICT. It is the candle, the first candle that makes a fair value gap, because it takes 3 candles to make a fair value gap. So ICT would say place your stops here. And even if you didn't want to enter inside of this, let's turn off the magnet, put a long position. Even if you didn't want to enter inside of this 1-minute fair value gap, it wasn't enough confluences for you. Let me go 1 minute. But you could have waited for one more thing, which would have been a 1-minute breaker. So when this candle closes above these, you could have really entered anywhere in here or in this candle right here, because this becomes an order block, but once it closes above it, it's a breaker block. And as you can see, it uses said breaker block almost perfectly to go to the upside. So I would say anywhere within, between this candle's low and this candle's low would have been a great entry. So at the top of that fair value gap, you place your stop below this. And what is that? That's already almost like could have easily got a 1 to 2. That's absolute goal, is getting 1 to 2s on a consistent basis. And then look at, probably could have asked for like a 1 to 5, 1 to 6. Craziness. Of course, you wouldn't have known that. But I think for the amount of confluences here, I need to find more patience in the market. 1, 2, 3, 5 confluences, man. That's like, even the 1 minute gets an OTE retracement too. If you could just go right here where it reverses, look at that, comes down, touches OTE. So you could even place before it even makes a 1-minute fair value gap or 1-minute breaker. You have a 1-minute OTE right here off of this order block. So you could have entered here, 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 or here, and really had a good risk to reward ratio no matter what.